I'm going to really kind of give you a run through today on Stagwell, where it is, where we're going, what the future is, and why it's a good place to invest. So, and somebody's got to give me the clicker here. All right. You. And we're going to look into this. So, what I want you to think about is if you're investing in Stagwell, you are investing in the future of marketing. And marketing itself is something that's undergoing vast transformation as it went from mass marketing to individualized, digitally placed marketing. And when you look at Stagwell, you're going to go through the high growth digital services we offer, the proven leadership team, the strong margins, the industry leading growth, the platform that we have created to continue to expand and grow, and how specifically we're going to move into larger markets. So first, let's take a look at the marketplace itself. The advertising market is ripe for continued disruption. If you look at the marketplace today, it's about $120 billion in services. Stagwell comes in here at $2 billion. You can see the consulting companies have eked out about $8 to $10 billion marketplaces. Primarily, those companies got the back end of marketing, but really didn't have the full front end of marketing, the creative services. The holding companies that everyone loves to hate but have no alternatives to using are about $60 billion of the marketplace. And obviously, one of our primary goals is to push into this marketplace in a significant and growing way, taking advantages of, we believe, the problems in the marketplace with the competitors. Some are too big and have to slim down. Some are behind the times in technology. Some don't have the creativity that you really need to grow. Let's take a look specifically at the disruption. Right? If you look at the advertising marketplace in 2000, 35% of it was TV. Of it was newspapers, and 15% magazines. Obviously, now newspapers and magazines have moved online, and it's all about the 44% that continues to grow, all about the 44% that continues to grow here in terms of digital online marketing. But television is still 31%. So there's still continued use of television, although television itself is going to become more connected TV, which means more addressable TV, which is really good when you think about it for companies like us to be able to create, because creative will still play an incredible role combined with technology. And the critical thing to think about with us is that combination of creativity and technology that can grow in the marketplace. Now, let's take a look at some of the other related marketplaces. E-commerce is growing at an 18% CAGR. So every time that people spend more and more online, logically, that is going to generate more online marketing. If you look at the general category of digital marketing services, we see that that's growing at about 13% a year. Now, we also have an investment in advocacy, and if you look at generally that spent on issues and candidates from a paid media point of view has been growing at 22%. And you look specifically at online fundraising has been growing at 61%. So it's a tremendous growth marketplace. Anytime you look at the platforms now, what people talk about in terms of issues, in terms of their commitment, in terms of their ability to contribute, and some of the presenters later on will explain that in greater detail. I want you also to look at a couple of other related markets which we're going to move Stagwell increasingly into. One is the market for precision data. If you look at the market research and measurement data, that market is relatively slow growing. But when you look at the new types of information that can be garnered from online analytical sources, and to get that kind of data on an interactive basis, that market is actually growing quite significantly and is about another $150 billion marketplace. Then we look at marketing technology. About, if you think about it, and I ran for a while all of the advertising / marketing at Microsoft. I enjoyed about a $2 billion budget at the time, but I had my internal team, which was in-house, certain services and techniques that we did in-house, and then I had my agencies. And increasingly, as campaigns become more complex, there's another $43 billion marketplace in campaign management software and customer platform spend that we're also going to tap into. Again, if you look at e-commerce, what's happening in e-commerce is that Amazon and Walmart are discovering that they can make money not just by selling products, but by selling advertisements within their sites to sell products. And it turns out, because they have a marginal cost of zero on that it's really pretty significantly and fast-growing area. But how do clients decide where to place it, how to place it, how much to spend? That creates new business for Stagwell. Connected TV, as I said before, is also a great area of growth for us, because what's happening to those people who made traditional television spots? Well, now, if you're going to have connected TV, generally the most important feature of connected TV is that your advertising will become more individualized. Well, that means that one ad then has to turn into 5 or 10 ads. So in order to carry out the promise of connected TV, you really have to go to marketing services companies who can A, target it effectively, and B, create multiple creative now that can take advantage of the differentiation that can be had in the marketplace. So go back to the in-housing. About 25% of marketing budgets are spent on in-house labor. So that means that we want to, in order to play 100% across the marketplace, we don't want to play in just the $120 billion that goes to outside services. We also want to play in this, and I'll come back to that in a few minutes. Now let's take a look at Stagwell today. What we have achieved, and what was a critical part of the combination of companies that we went through this year, was to create an integrated platform for the modern marketer. That means having digital transformation services, the ability to build digital consumer experiences, right, to design and engineer and deliver those experiences. We now have, if you look at it, as I'll explain, we have about 1,000 engineers backing up thousands of designers, right, who are able to deliver those experiences. Second, you need performance, media, and data capabilities. You have to be able to deliver advertisements to exactly the right people at exactly the right time, addressable on a global scale. You need to have insights and strategy in the campaign planning. And you need to have strong creativity and communications. That this is really the pyramid that makes up what a modern marketer needs to deliver the right ad to the right person at the right time. And we have filled in quite significantly each of those blocks in the pyramid, and now have about 10,000 employees, 1,000 engineers, going into the $120 billion market. We're in 68 cities in 24 countries. Importantly, we have 4,000 blue chip clients. A lot of what we're doing is saying we already have, whether you name virtually any well-known company will touch Stagwell in some way. The question is, how do we increase our share of wallet with those incredible clients? We've got about 2.2 billion LTM revenue and close to 400 million LTM adjusted EBITDA and free cash flow at about 50%. We have now put together a coherent, experienced management team. As Steve said, I've got a little experience myself, everything from managing to being someone who founded a company, who put it into larger companies, to managing larger assets. Part of the problems I find in the industry as a whole is that people running it don't have the actual experience. This team does. Jay has worked 25 years in this industry. Beth has worked 25 years in this industry. Frank and Ryan worked in the finance departments of the largest marketing services companies. Through and through this, we really have core experience, and we have a corporate leadership team that runs all the corporate functions, but then we also have consolidated a business leadership team that runs the frontline businesses across the 360 degrees of services. When you look at it, I've taken what would be kind of a large mass here, and when I started was really an archipelago of various companies, and we have collapsed them into networks. Those networks are run by key leaders. The Constellation Network has, say, 72 an instrument in it, and they combine the combinations of services so we can go to market with different flavors of creativity and technology, but much more effectively than in the past. The Donor Partner Network, best known for kind of what we call Main Street marketing, Code and Theory with F&B, kind of leading a digital transformation. Anomaly, you'll hear from Carl Johnson. It's just had a fantastic combination of strategy and creativity. And then our communications and advocacy group, which really kind of spans, I think, the waterfront on these issues. In the middle is what we've put together as the Stagwell Media Group, and that can service the entire constellation here, and a global solutions group that can draw from any of these case studies and talent from anywhere in the network, and a digital innovation group that we are launching, as you'll see, and that we have launched, but that we are going to put increasing emphasis on, in the coming years. We created the Stagwell Media Network, right? It's a single network that now brings us the capabilities from top of the funnel, right, all the way down to CRM and loyalty, all the way down to B2B, and this gives us centralized platforms for media buying, and they're partners with the creative companies who have the frontline entrances into the CMOs. This really didn't exist before. These were resources that were too spread apart, not really relying upon the full power of the $5 billion of media that they either place or are responsible for placing. And this is a strong, new, and growing unit. Some of the best new accounts are coming in, particularly to Assembly and Gale. I mean, I think the message of my earnings call was kind of straightforward, that the merger's working, right? We showed a net revenue growth of 25%, organic growth of 23%, adjusted EBITDA of $100 million, up 12.4% year over year, adjusted EBITDA margin of 20%, and I'm going to come back to the digital revenue mix of 48%. And larger contracts are beginning to, come into the house. We're getting invited. Even, the merger was announced August 2nd. Right away, people see, I think, the pickup in terms of the size of contracts. If you look at it, if I look over the last, period, Q Health, 3 agencies working together, World Stride, 3 working together, headed by Ray Day from the central marketing team, Amazon Kids, several agencies working together, Supercuts looking together, integrated creativity and media. You see how the Stagwell Media Network and the organization of the company is working to produce new kinds of contracts and results that frankly weren't there before. And this is a critical element of growth through the merger. So where are we going? I call my general plan giving Stagwell new digs, right? And so it really has 4 dimensions: digital, integrated, global, and strategic, right? And so obviously continuing to invest and leverage the growth in digital business. Integrating, to me, has 2 separate meanings: bringing together back office services into network-wide functions in IT, HR, real estate, and going to the market as a single entity for more scaled, integrated assignments. Global is obviously we're continuing to expand the network out from the US globally. And strategic, we have built a platform for strategic acquisition that we obviously can successfully manage as a critical part of continued growth as well. So let's take a look again at this pyramid and put some numbers around it. If you really look at the pyramid, 48% of our revenue now is from these core digital services: digital transformation, digital media and data, and digital research and insights. Now, if you look at one of the larger holding companies, the largest said they hope to have 40% in this bucket by 2025. We have 48% in this bucket today, and that's fundamentally why our growth curve is so much stronger than the rest of the industry. We are better positioned in the marketplace based on where we are. And just to give you examples, if I take out these companies, Code, YML, Instrument, Gale, Assembly, NRG, Harris, and Targeted Victory, together this group is about 37% of net revenue, 44% of adjusted EBITDA, and their growth was 89% and 145%. So this group represents, not something way bigger than an acorn growing into something certainly as big as an oak tree. And if you kind of run through the math of the formulas, you'll see that we've really hit the sweet spot of growth far above the typical overall 13% growth of digital marketing services with these companies. This means by 2025, these core digital services will be about 65% of the company. And we will also be adding on top a layer of SaaS and DaaS products. So we will be 65% high growth digital, and by that we mean growing at about 20% or more a year. We'll be adding the layer of SaaS and DaaS products, and we will continue our strong emphasis on the combination of technology, right? But it will continue to shrink as the creativity will continue to shrink as an overall proportion of the business. We expect the longer term mix to be about 80-20 because we expect, again, the continued growth curves here, along with the transformation in marketing. Now, let me come back for a couple of minutes on the SaaS and DaaS. Right now, we don't have any current, really, we have some modest current revenue, but we have built up a suite of products and have the ability to go into these places in a very cost-effective basis. A startup that might cost tens of millions will cost just a few million within the Stagwell network. Why is that? Because we have thousands of quality clients already connected to us in marketing areas. We have already 1,000 in-house engineers, and we have thousands of marketing experts who understand what clients need. It gives us a fundamental advantage that we're already applying in the marketplace. The goal here will be to create a Stagwell marketing cloud. That cloud will be sold as a unified set of services, and it will go for those people who are doing in-house marketing. So if you're doing in-house marketing, you're going to need an influencer marketing platform such as we have. You're going to need an ability to target and create target markets. You're going to need AI that tells you how news releases are going to be are going to fare in the marketplace. You're going to need to know how to place marketing in the emerging, AR and VR world of advertising. You're going to need a terminal with competitive brand information. So we believe that as currently these have been developed as individualized products, what we will do and be putting a wrapper around them as the key tools for in-house marketers, and we will have a suite of tools that cover each and every of the key services. Just as we have now completed a 360-degree marketing wheel for what the modern marketer needs out of house, we'll complete on a technology platform basis what's needed here. And this, we believe, then opens us up to significant additional TAM, which right now is included only modestly in any of the numbers. I want to just give you an example of Q. This product is kind of nearing completion. It takes our flow of first-party proprietary data that we have coming out of the research, puts it together with client data, and then really designs target marketplaces without having to have cookies. And this is an invaluable platform for creatives, for media targets, for, frankly, both agencies internally using this and clients who are doing in-house work. This is a little video that explains a little bit more about this product.
Built for the post-cookie world, the consumer understanding and engagement platform turns overwhelming data into fresh target audiences and opportunities for growth. Filtering out the data you don't need, organizing and making sense of the data you do, helping you get the right message to the right person at just the right time. Q, the consumer understanding and engagement platform. Q turns overwhelming data into fresh target audiences and opportunities for growth. It's a unique, scalable way to capture and connect consumer data. How does it work? Let's say you work at Sweet World LLC, the maker of amazing cakes and candies. Q combines proprietary survey data from millions of consumers, web data, retail data, all of Sweet World's customer information, and even competitive analysis. First-party data, no cookies needed. The unique data combination enables AI-powered analysis to conclude that pink and purple sprinkles are key ingredients to add to new treats and to attract new fans. Turns out that sprinkle bowls, in sets of 3 and in assorted flavors, are exactly what consumers want. Q also identifies the right targets and marketing channels for these new treats and activates your campaign in a true omni-channel fashion. Stagwell's Q is the new intelligent way to make sense of all that data in real time and solve your marketing problems. Q it up today.
So right now that continues to be in testing against other marketing methods, and we expect this to be, released within the coming months to consumers directly, but is already being applied to consumer problems internally at Stagwell, and meeting good pickup. Another area where we've really moved into, data as a service is we've taken the Harris poll and its corporate reputation work, and we've terminalized that into basically something that a brand marketer can use to identify, let's say if you're Citibank, it will be the 4 or 5 JPM, Bank of America, monitor all of the corporate reputation in real time changes across dimensions against you and your competitors. This has gone from 0 to a $5 million run rate, over the last, several months. It's really had tremendous pickup, and we're going to be taking our, really both a lot of the media surveys that we do for the studios and streaming companies, terminalizing them and turning them into, the same kind of revenue. And we're also going to be taking we have the largest smartphone survey in the country, and that's about almost 200,000 people a month, and terminalizing that and critically turning all of this stuff into kind of recurring terminalized revenue as the second piece of the SaaS and DaaS initiative. There's some other frontiers that we're likely to go into. We'd go into NFTs from the point of view of marketing, which is to say if a big company, fast food company, wants to create NFTs that they're going to give out in a contest. So we expect that there are interesting marketing opportunities in NFTs that we can create a market for. We've already started working on the augmented, reality problem, particularly starting with a relationship with a major baseball team to develop in-stadium or augmented reality experiences where you hold your phone and you see more and more information about the game, the players, and perhaps a few ads at the same time. We'll be looking at a QR advertising marketplace as expansion of that. So, these are examples of areas that that it's important to see Stagwell as an evolving and developing company. It is about transforming marketing. It is about catching the changes as they occur. It is about becoming more adaptive to those changes. And that's where we're going to expand the TAM, right, from approximately 120 billion to approximately 300 billion, because we expect to then be open to these marketplaces, particularly the in-house suite, and particularly the marketing data, then puts us in this combination of market spaces. But even without those changes, I think you see the earnings of the last quarter. You see this incredibly significant growth path by having 48% being high growth digital services in our current mix. We're not going to forget about the $30 million of synergies. A lot of those synergies take place in the media department, where we've brought everybody together and can have a centralized, accounting and placement platforms that serve as resources for the rest of the companies. We're also expanding out globally. Remember, we've added an affiliate program because the market was primarily, if you look at Stagwell after the combination, we qualify for just about any marketing service contract in the U.S. And our goal is to expand that notion into qualifying for virtually any company globally. That will be first, most importantly, filling in global media, and second, global digital capability, and third, global creativity. We've already gotten about 30 affiliates. Our goal is to have 50 by the end of the year, and we're moving very quickly on that. And these affiliates also serve as a farm team for potential acquisitions. We're also moving to global engineering development. If you look at it even now, we have about 25% of our engineers in the U.S. We have significant numbers of engineers in India, the Philippines, and actually, with recent acquisitions, really, we found Latin America to be a great place on the same time zone to expand engineering capabilities. But this will also kind of work as a way to keep costs under control while we expand engineering capabilities to provide digital services. Again, I think there's a plan here to win additional paired media and creative contracts, to compete onto media contracts at scale with our affiliates, continue digital-led fast growth in the Mideast, improve the relationships between the agencies, the creative agencies, and media. What happened here was, for many years, media was split off from creativity. Media and creativity, because of the connected nature of experiences, is coming back together. And we have the nimbleness, I think, in order to make these combined offerings. And I think also Brad's going to talk about the creative media consultancy that he has founded that has particularly hit a sweet spot in the market. I think also Jason Reed is going to talk to you a little bit more that you also have to view what we've built here as a platform for growth. We have shared services. We've been able to make accretive acquisitions at scale. We have an innovation group. We have central marketing and global solutions, and we have an affiliate network. It means that we can take a company whose market space is limited and bring it into a network and see the kind of growth by bringing in more multinational or bigger assignments, bringing them into fixing kind of how they operate, and training them in new methods. And obviously, we wouldn't be here today if we weren't successful at being able to take companies in, understand how they work, and fundamentally improve them. And those scale benefits only increase. We've taken a lot of the incentives, we've also unified them, and enabled people to kind of come together here so that they have an interest now, not just in their own small division, but an interest in their career, their company, their division, and the larger company as a whole. And we've redesigned the incentive system system-wide in order to create that. So finally, When you add up everything I've said, some of the previous charts really estimated annual organic growth at about 5%. And I've really moved that up to the 7 to 9% notion because you can see already that the merger is working faster, the digital growth post-pandemic, I think, has been accelerated, that a number of the combinations that we have that in these growing marketplaces, I think is working in a very strong fashion. And so I've moved that up 50% to 7 to 9. I'm leaving the Stagwell Marketing Cloud where it was because it's information, and I don't like to overpresent something that they're really building. And I've accelerated some of the M&A growth because I expect that the faster growth in the overall system will generate additional cash for investments and still staying within the framework of staying at about 3 times leverage. Because our goal has always been, be at about 3 times leverage. We know here that the cost of money is 4, 5, 6%, and the kinds of returns that we get on our investments are more in the 20 to 40% range. So we believe that we can continue to effectively invest and expand the platform, and that moves the 2025 goal from $3 billion to $3.4 billion, and when you add that up and beyond. So that's the plan. Those are some of the key features. I think you're going to hear from some great people who are on the front lines and are helping manage this. I hope you'll consider these key factors in the future of Stagwell when you think about investing in us. Now let me turn this over to Julia Hammond, who's going to talk to us about managing larger clients successfully.